very few things that we can't green, in which case we just won't finance them. Because to be very honest, when I started, it was neither cool nor sexy to work on environmental matters in the finance industry. We were very unpopular, about as popular as the lawyer or the credit risk officer on a deal.
It doesn't have to be overcomplicated, and in the long run you can save a lot of money.
I think the main failure currently is that we have no price on carbon. Look, what I'm very proud of is when we can really influence a system. Start engaging with even an SME on the business case, they get it very quickly.
Hello and welcome to Leaf Media Global Podcast, a space for professionals and enthusiasts dedicated to ESG, environmental, social and governance. In this series, we are highlighting inspiring careers, innovative strategies and bold visions which are tackling climate and social emergencies. I'm your host, Ben Stimpson-Wood, Climate Engagement Manager at Greenly, hosting the first UK season where we spotlight leaders reshaping sustainability in business and communities. Briefly, before we get into our guest, this podcast is produced by Leaf Media and powered by Greenly. Greenly is a leading ESG management platform helping companies measure, report and reduce their carbon footprint. Operating in both Europe and the US, Greenly empowers companies to turn their climate commitments into actionable strategies. We have grown into a trusted partner for businesses of all sizes, offering automated GHG reporting, compliance with frameworks like CSRD and SBTI, and offering tools for supplier engagement and life cycle assessments. So, if you have ever wondered how money can actually fight climate change, especially in regions often left out in the conversation, here we are, we're in the right place. So joining us today is Maya Hennerkes, a leader in sustainable finance who spent over 20 years turning complex climate goals into real world actions. Maya is the Director of Green Financial Systems at the European Bank for Reconstruction and Development. She spearheads strategies that bridges finance and planetary survival. Her work spans key markets like Turkey and Poland, where she supports green financing initiatives such as the Green Economy Financing Facility, helping businesses and homeowners adopt green technologies and make the shift to a low carbon economy. So Maya, thank you so much for joining the show today.
Hi Ben, thank you very much for having us.
So let's start with you. Let's start with the beginning of your journey. When we talked maybe before this interview, you called yourself a reformed banker. What drew you to the work of sustainable finance, I guess? What made you maybe say, I still want to do finance, but differently?
I think I was always drawn from a child's age to environmental matters, questions of social justice. So that was always there. And then I was working in the financial sector as an analyst, and I witnessed the day that Lehman collapsed. And I remember this day extremely well. It led me and many others, of course, to a lot of thinking around how our financial system is structured, whether it does what it's supposed to do. And for me, mainly, the conclusion was that it isn't really apt for financing the transition to, a low carbon economy, and that it's also not necessarily inclusive.
Yeah, fine, amazing. And then what made you want to go into EBRD then after that?
I was already working for another development bank before EBRD, covering Latin America and the Caribbean. And I absolutely loved my job, and I love the way that at a development bank you can do real life projects. You really put money where money is needed, but you do it in an environmentally, socially responsible way. So then I applied to EBRD. I actually had to apply 3 times before they accepted me.
Outrageous.
And, outrageous. And,
we won't bring that one up again, or we might.
But because I was very fascinated by the very diverse region of EBRD. EBRD invests in countries all the way from Morocco to Mongolia. Wow. And it's very diverse and very intellectually very stimulating.
Yeah. It's very cool to see, I guess, the efforts they're putting into maybe the countries that are always never really the big focus. Yeah. Do you know what I mean? And it's that, and it's, you are having such a good impact, you're having such a difference, and you're at the forefront of that. I think it's really cool. So this is definitely for my benefit and probably some people listening. I want to get into like the basics and like the listeners who are definitely not big familiar in this industry and like in the finance and the green finance. Can you introduce maybe the full, like a good background of the bank? Like what's the history of EBRD? What's like unique about them? Just that kind of overview of in a way for dummies, shall we say?
So as you said, we're a development bank. It was created after the collapse of the Soviet Union to help the ex-Soviet countries transition to open market economies. Now, over the last 15 years, our transition mandate is still very much alive, but it's much more anchored around the green transition. So we're helping countries to transition the real economy to low carbon economy, and the other things are still there. Of course, we're also still working on markets and development of markets. But in my line of work, it's all about the green transition.
Right.
And we're a public institution, so our shareholders are governments.
Cool.
Where we invest in very diverse countries, as I said, from Eastern Europe to Central Asia to Africa and Turkey and beyond.
Yeah, fine. Amazing. And then with that, how does it like differ from other development bankers, would you say? Like, is it different from the European Investment Bank or like the World Bank? Like, what would you say is your UCP? So I guess like your unique selling point, I guess.
Look, I think we're all part of an ecosystem, all with our individual sort of characteristics and strengths. In EBRD's case, it's of course the transition mandate that I've said. Also, we're very private sector focused. So every year, 70 to 80% of our financing goes directly into the private sector. And I think another characteristic is we're particularly good in connecting policy interventions, support to governments with this sums of financing that go directly into the private sector.
Fine. That's very cool. Yeah, because again, it's there's a lot out there, and it's what's making you the best and what's making you the top bank, I guess, like with it. So with the sticking with the banks, I guess, like what's one misconception about the bank's work you'd like to correct? Maybe a bit controversial, but like what is something that you'd, if you were top honcho within this sort of thing, what was something that you'd really like to do as an impact, would you say?
I think misconception is more historical because people still think we're sort of only active in, some small parts of Eastern Europe maybe and a bit of Central Asia. And I think the sheer diversity of our geographical reach nowadays is not that well known, perhaps. So I think this is important to rectify. Other than that, look, MDBs sometimes we're called as being a bit slow, maybe a little bit, bureaucratic. I think particularly at EBRD, we are slow when we have to because we take things very seriously, including environmental and social, and we do very thorough due diligence. Yeah. But I think within the world of development banks, I think we're actually quite agile because we work so in a vast majority with the private sector, so we need to run with them. We can't 3 years behind.
No, yeah, fine. You have to work with it. It always comes back to word of like collaboration again. Like it's always the big topic, especially in this industry, and it's I think what helps with that. So that's cool. Sure. So my colleague recently did an interview with Clover Hogan, who is a climate activist and founder of Force of Nature. We normally get them to ask a question and want them to get to a question to you. So she has basically said that she thinks that something she's really interested in is the relationship between global finance institutions and policy and regulation. And of course, like a lot of financial institutions have done a good job trying to evade accountability or even lobbying for regulation that does not hold them to account or reflect the true value of things. So the question that she wants to ask is, the main question is, what is the role of lobbying as a force for good? And what are the kinds of regulations that we should be drawing attention to and like campaigning for, which would force the entire industry to really move?
Look, I think first maybe where I don't necessarily fully agree is on banks as these completely, unaccountable, unregulated things out there. The financial sector is highly regulated, and I think they do pay very close attention, of course, to policies and to regulation that's upcoming. Now, what is not addressed, and I'm sure Clover would agree, I think the main failure currently is that we have no price on carbon. And that is something that then banks obviously are not pricing in when they construct financial models. And that is something that companies don't factor in when they, produce things. And so if you want to start lobbying for something, I'm absolutely in favor of activism in climate. I think it's very much needed, and I welcome these efforts to lobby governments for the right regulation. And I think a price on carbon would be the main thing that would really shift the needle.
Oh, and then if you were to bring that, how would you transition that in if you were to do it, sort of thing? Like, how would you try and introduce the price on carbon? How would you try and manage this process, I guess?
Like every regulatory thing, once regulation decides to introduce it, the real economy and the financial sector, they will scramble to introduce it and to include it in their models. I think it will just address this market failure of, in the same way as we don't have a price on natural capital. And I think the combination of the two makes it such that, the finance isn't flowing in the scale and at the speed that we wanted to the green needs.
Yeah, make it mandatory, basically. No, I agree. So as getting into your role, I guess, let's focus on you for a little bit more now. So as head of green financial systems, what does your team do on a day-to-day? Like, can you explain to me what financial systems are? Like, what's the green financial systems? Like, that type of thing for a moment.
Yes, sure. So financial system for me first is simply sort of the set of institutions, regulations that, make money move from, somebody who loans it out or invests to somebody who wants to borrow it to invest in their, the company, or it could be an individual. So that's an ecosystem. And this ecosystem can either be solely focused on financial considerations, or this is what we're trying to do. If it is a green financial system, it will include environmental and social climate considerations into everything, whether it's the regulations from a central bank to a financial institution, a commercial bank that considers those things when they make lending decisions, to, of course, the off-taker, the borrower, who uses the funds in a way that is environmentally responsible.
Fine. So the green will always be at the center of the hub in a way when you're doing anything, and then you'll move from there, sort of.
Yeah, so ideally it is mainstream throughout the whole circle. It's not something separate nor, per se in itself. It is mainstream through.
Yeah, fine. Amazing. And then you mentioned the Delphi Economic Forum last year, that we are green everything. What does that mean?
I hope I said we can green almost everything. There's very few things that we can't green, in which case we just won't finance them.
Yeah.
No, look, what I meant was there are financial instruments of many different forms. There's obviously lending instruments, there's equity, there's trade finance, there's leasing finance. And I think what we've been quite good at EBRD is to develop a green version of all of those instruments. So if a client comes to us and would like a guarantee for a cross-border trade, we can help by saying, why don't you apply this? Why don't you use this for a green product or a green commodity? So we can help with that. Or if you borrow for an SME, if you're an SME and you want to loan, we can maybe help you find a green version of that technology that you want to purchase, or and then we think the impact is much higher.
Fine. Yeah, it's just trying to get them thinking more green rather than anything as well, I guess.
Yeah, and incentivizing it also.
Yeah, no, that's very cool. So are you designing policies, crunching data, or working directly with banks? Like, what does designing a green financial system actually involve?
I would say we do all of the above. I mean, most of our time is spent in the trenches with the clients. Yeah, so we work with the banks, with funds, with all financial intermediaries in the countries to really figure out, how do I green myself? How can I, green myself as a financial institution? And then how can I green my client relationships, my business offerings, and so on and so forth. So this is where we spend most of our time. And I think this is also where we really make a day-to-day impact. But the other two things that you mentioned, we also do. So we also try to influence policy. We work, for example, with central banks so that they include, let's say, climate risk considerations into their supervisory activity. Or we would advise maybe a finance ministry or, another government agency that would like to set a regulation on, let's say, ESG reporting, for example. So we will give our best professional advice on that. And then data crunching, of course. I mean, the data question is super key to the entire sustainability transformation. And we do it a lot ourselves because this is our way of also understanding our clients and understanding their business. But we also help our clients to weave through the jungle of data and find the material data points for them.
And I can imagine the data side. I mean, everybody's talking data and it's always trying to find it. Where would you say, is it harder on the SME side? Is it harder on the bigger side? Like, where would you say is the most pain with data? Like, is it finding it? Is it trying to understand it? Is it trying to...
I think, look, ESG matters more broadly are very complex. Mm-hmm. They are not easily captured in one formula or one data point. That's the complexity of it. Correct. So you need to draw from many, many different data sources, whether it's meteorological data, whether it's social data, population-related data. So there's many, many different data sets depending on the matter at hand that you need to draw on, interpret it, and then decide what am I going to do with the conclusions, right? So I think for SMEs, it's mainly a capacity issue. So they often don't have the right capacity. They're a bit sometimes also confused, what is really important for my sector, for my business environment. Yeah. And for the larger institutions, they have better capacity, but the requirements on what they need to analyze or report on are obviously also much, much bigger.
Because I think that's the thing with SMEs as well. That some are fighting on other things, are focusing on other things, and this isn't normally never their main focus. And then I'm guessing if they get an investment from you and everything like that, are you really just forcing it onto them? Not like in a horrible way, but you're just like, look, this is how you need to be thinking. This is how you need to be doing it, sort of thing.
Look, there's a very clear business case for doing this. Yeah. And once you, I think, start engaging with even an SME on the business case, they get it very quickly. I mean, if you're a small dairy farmer in Morocco and temperatures are rising and I discuss with them cooling technologies and I show them that they can lower their costs today for cooling their milk products, at the same time they can adapt climate adaptation finance for the future, because they will rely, by rising temperatures, they will rely on much less electricity and much less cooling costs. They get it immediately.
Yeah, as soon as money comes in and they get it, it makes sense, yeah.
I mean, especially for SMEs, look, I think we need to keep it real for them. We need to show really what's in it for them. But the business case for me is crystal clear.
Yeah, that's what I've learned since joining this industry as well, is a lot of it is teaching. And it's more just making people understand that it's not difficult, it's not hard, and it's like, it doesn't have to be overcomplicated. And in the long run, you can save a lot of money. Like, it's very interesting with that side.
Yeah, well, it may be engaging and not teaching. It's not like we go
No, agreed. No, agreed.
It's more like, really, let me help you. Yeah. Look at the data. Let me give you some examples from another client I've worked with. Do you want to speak to another client in the same sector from another country, maybe? I think that's a better way of processing it. Yeah, I completely agree with you on that side. It is very much, again, going back to the collaboration, but it's like you're working with them to get them to work like well, and you want their business to thrive, and it's going to be good. So that's amazing. Okay, perfect. And then how does a conversation with the Bank of Armenia about transition plans turn into action? So I think with any bank, Armenia is an example because it's one of our countries of operation, of course. We usually start on the basis of a product. Very often they come to us, maybe they're interested in a trade finance line, maybe it's a simple SME lending line that they come to us. So first we start usually with a product. They get to know us, they get to know our environmental and social frameworks, they get to know our climate work. And then as the client relationship deepens, we often have further engagement with them where we say, look, there's regulation upcoming. You may be wanting to shift also your business towards, the goals of the Paris Agreement. You may want to engage with other clients that are interested in green products. You may want to open and widen your access to finance by being able to speak to various investors that are maybe interested in or have very strong green, environmental or social policies. So that usually they say, oh yeah, that's something we are definitely interested in.
Yeah.
And then we say, look, transition planning I'm a big fan of transition planning because transition planning allows you to start wherever a financial institution is. It's not a binary yes, no, like maybe a reporting framework is more, here are the things you need to report on.
Yeah.
Transition planning is much more adaptable. You look at the client, where are you, where do you want to go? And then you help them map out this transition across all the different areas, whether it's reporting, whether it's risk management, whether it's business development, and then policies.
Policies.
And
fine.
then, you have a very strategic plan that also the board and the executive committee of that bank buys into, because otherwise, it's
fine.
unlikely not going to happen.
Fine. And then within the many countries that EBRD operates in, how do you prioritize which regional sectors get funding? Is it about the climate urgency, like the economic potential? Like, what is it, would you say?
Look, I mean, we love all our countries equally, of course. And it's very much demand driven. We're as I said, we're a very private sector focused bank. So clients call us where there's demand, we go, if it fits our policies, of course. Now, having said that, we have a country strategy and we also have a sector strategy for all sectors and for all countries. So we will look whether a proposed operation, a project fits those two strategies, and then we will do it. Again, having said that, we invest in all of our countries, so we would never say, oh, in one country we do nothing 1 year and double up in the other. That's just not what happens. The demand is also, frankly, so broad that there's always enough opportunities for us in all countries. And then some things, yes, are driven by urgency. So, for example, in Turkey, when there was the earthquakes, obviously we put in all-nighters and we immediately, reacted with putting liquidity into those clients that needed it right then.
Yeah, fine. So so you put the priorities where it's needed straight away.
Yeah.
And then obviously then you can kind of map it out from there with the different countries that you want to focus on. Or
Ukraine is another example, obviously, of the war situation. From the beginning we've said, look, we're standing by Ukraine, and so we've doubled up our efforts and we put more funding, more time, more effort.
Yeah, fine. What's some of the things you're proud of on that side then, I would say, in the Ukraine? You guys have done?
I think we're proud of from the first moment, our very strong and very dedicated commitment to Ukraine. We've really helped, I think, we've helped the financial institutions keep the flows. We've helped many companies, at times literally to keep the lights on.
Cool.
So I think that's something we're very...
No, because it's an interesting one, that one, to say the least. So going into social versus environmental durability, I guess then, like in developing economics, priorities like poverty reduction or energy access often compete with environmental goals. So how does EBRD adapt its ESG criteria to reflect these unique challenges without compromising on long-term sustainability? So for instance, in places where families need jobs now, but the planet needs cleaner energy later, how do you avoid choosing one over the other? Like, can you share a project that's pulled this off?
Okay, I would say 3 thoughts on that. First, you're right, sometimes they conflict. Often they also strengthen each other. So it's not always a conflict. It's sometimes that we find it. Second, we have a sort of point of no return on all of those pillars for environmental, for social, and for governance. So our social safeguards, our environmental and social safeguards framework sort of sets a threshold there are minimum requirements that must be adhered to at all times and through all of those pillars. Wow. So we would never do a project where, let's say, 100% great on the green side, but no, absolutely not reaching this minimum threshold on the social side. We would not do that.
Fine.
So there's a minimum threshold across all three. And then once this minimum threshold, the threshold is usually no harm. So don't do any harm, whether that's to the social fabric or, environmental harm across all. Second, we then look at the opportunities, and they can be very specific. The example that you mentioned, for example, about economic opportunity, something we're very, very sensitive to. We have an approach for just transition, for example. Cool. So let's say we in a country, let's say in the Western Balkans, where there's lots of mining, and we help a client there to create a renewable energy project, I don't know, a wind farm, let's say. What we would do is we would look, obviously, as part of our environmental social due diligence, first we look at the communities around that investment to make sure that it's not disruptive. And then we also look at the opportunity side. We will look, for example, okay, are there maybe people that can be reskilled from working in the mines to maintaining the wind farm? And then we have upskilling green skills programs and those things that we would then do.
That's really cool with maybe not going into the mines, but going into the wind farming as well. Like, are you seeing a lot of that on developing countries, or are you seeing that? Is that a big push that you guys do on that side?
It's always a case-by-case consideration. So we will look at the project location, at the communities around it, and then we see what are the opportunities. And if
cool.
we find, if there are opportunities, we will always try and harness them for sure.
Try and get that. And do you see them? Do you see the guys who are working on that enjoying it more? Do you see them like more willing to do it? Like, do you see that a lot?
I'm not sure. I think mainly, of course, it's, every human being is a mother, a father, a part of a family.
Yeah,
so usually for them, it's about their livelihood, it's about their community, it's about their income, it's about the educational opportunities for their children. I think we all humans, we have very similar interests in that case. So we try to look at those as opportunities, and we try to include or structure that in our project so that the communities around a project can also benefit from it.
That's really cool. No, I like that. I really like that, actually. So as someone who worked in SMEs in emerging markets, how do you convince a small business owner to care about their carbon footprint or their impact, and that sustainability reporting is worth their time?
I think we've kind of already touched on it. No, I think usually it's the business case that very quickly drives them. So we will look at what's really material to them. I think especially in the case of SME, it's not helpful to apply, a blanket, very broad reporting framework where they have to report on everything under the moon. I think you have to be very targeted. Really look, okay, what is your business? Is it water intensive? Is it electricity intensive? Are you using natural capital? Are you using wood, for example, for your business? And then you really focus on what's very, very central to their business model.
Focusing on the impact sometimes, and like what's actually going on. I mean, maybe we mentioned it before, like reporting is very important, but it's that argument of some companies just think reporting is being sustainable. And it's all...
Yeah, look, I'm obviously a big supporter of environmental and social reporting. It's very important for transparency, but it is, in my view, not a cause in itself. It serves a function if you've done everything. This is the end of the chain. First, you get the management of environmental and social matters right, and then you're able to satisfactorily report on them, and that's important for transparency. But the management needs to come first.
Yeah, agreed. And then when you're doing the reporting, it's understanding the risk, understanding your business better, and then you can understand where really needs the big focus, I guess, as well then.
Yeah, and then you can also set yourself targets for change and measure how to get there.
Exactly. Measure, reduce. So good old greenwashing. We love that word. It's always a fun one.
Greenwashing, there's also social washing.
Yeah, social. There's so many types of washing. Washing machines. So it is everywhere. But in regions with fewer regulations, they can probably slip through a lot of the cracks. When you're like vetting a project in these areas, with what red flags do you kind of watch out for? Like, how do you spot the companies that are slapping on a green, like just whatever onto their website, or like who are actually genuinely committed to change?
I think we have a very trained eye by now.
Yeah, I can imagine.
Look, you can tell quite quickly. I think maybe not as a consumer. If you go to a supermarket, it's very difficult to see. Yeah. If you go through the shelves, what is green and what is greenwashing, because you got to do a lot of due diligence and find out, what's the supply chain, what's happening.
Understand
But for us, we have very close relationships with our clients. We get to know them very well. We look at a lot of data during our due diligence processes, including, of course, environmental, social data. Mm-hmm. We look at a lot of climate-related data. But we talk to them, we don't... ESG, climate matters, they don't translate very well just on paper.
Fine.
you can't really judge it very well just on paper. So we will always go out, we will do site visits, and you can tell very quickly.
Yeah, I can imagine. And do you ever find that they do it later on at all? Like, have you ever come across a project where 4 or 5 years down the line, you're like, hold on, that's not right. Have you ever come across that before? Or is it normally you can kind of catch them out quite quickly?
I mean, we would be not doing our job if we caught it 5 years.
No, of course. As an example is more than
later.
Anything, yeah.
We do annual monitoring. So I think if something, look, in the private sector, in a company or in an investment project, of course things can go wrong.
Yeah.
You constantly need to adapt. You need to work with them. You need, you find things are not working out as expected. You need to, somehow wriggle through. But we monitor depending on what the project is. If it's a large infrastructure investment project, maybe even every 3 months in the beginning while they're constructing. Mm-hmm. So we stay very close with the client. We monitor very carefully. And if there's modifications, if something happens, it can never go below our standards.
No, fine.
So we will always work with them to maintain, at the minimum, the compliance with our environmental standards, but ideally also for their own good and for our interest to maintain and really harness the opportunities from the green transition.
Of course. And like you said, you're always kind of working with them anyway. So it's always a consistent relationship you've got with these guys. And then have there ever been cases where you found out halfway through the project that the project did not go as planned or was like developing in a direction different from what you imagined during assessment?
I mean, I wouldn't say... the main project, what a project is supposed to do, that is all agreed up front. That's part of the contract that you sign, of course. Now, do things sometimes happen that are unexpected? Of course, yeah. Then of course that happens. When we find that, as I said, we'll work with the client to keep it right or make it right, or we'll support them if, sometimes it can be things out of their control. You can have an investment project and there's a flood event. Now with increasing climate risks, that happens. There's a flooding event or a weather event that is out of the ordinary. Then of course, hopefully we've looked at those things as risks.
Fine.
Early enough, and then there is a plan in place to handle them appropriately.
Amazing. And then EBRD operates in places where communities are split by language, wealth, or like politics. When designing projects in diverse communities, how do you ensure that your approach actively brings people together instead of making things worse? Like, what core principles or steps guide this process?
These characteristics are probably true for most countries in general. I would say, look, all our projects come with a very close consultation process based on the principle of free and prior consent. So we would not, we don't do a project in a community that is explicitly opposing a project. Mm-hmm. We will work with the communities to see what are the concerns, how can we address them, how can the project maybe make some changes to take care of the considerations. Gaining this sort of license to operate in a social sense is super important for a project and also absolutely makes financial sense. I've seen many projects in the past not work well because they maybe did not have that license to operate. Not our projects, thankfully, but in general, in the sort of development finance world. And so that is, our bread and butter. That's essential part of our projects.
Fine. And then what safeguards does EBRD use to access potential social risks in projects? Like urban-rural disparities or cultural sensitivities? Like how do financial tools like green investment ensure ethical benefits across different social groups?
Again, I've said it before, there's the two sides of the risks and the opportunities. So on the risk side, again, we have our environmental social framework that also looks at labor rights, it looks at cultural heritage. So it looks at all those things that are concerning the social fabric, the social, environment of a community. And that's taken very seriously, human rights considerations and so on and so forth. So that's part of our normal standard due diligence. And then there's always the opportunity part. Like the example we spoke about with, for example, upskilling, reskilling people. we will always look at that. Sometimes there's an opportunity for something simple as, adding an investment component for a big company to create a childcare center, because that allows then the local community, the women from the local community, for example, to work at that manufacturing plant.
Yeah.
And so, we try to always look holistically. Does it always work? No, because, it's always a negotiation with the client. The financing needs to be there. But, as a development bank, that is part of our mandate. So we will always look, can we maybe find some donor funding to support certain measures that make the project better from an environmental and social perspective, but that are maybe not immediately bankable or immediately profitable in itself.
Fine. And then with the projects, I guess, what's been your favorite one you've worked on? What's been your best project you've enjoyed the most, would you say? What country was it in? What was the project? What would you say it was?
It's a bit like asking me which of your children do you love the most. I cannot quite.
We could ask both.
I can't quite answer that.
No, fine. If you could do top 5, for instance, are you able to answer that question, or not really? More what's something you've been proud of, would you say?
Look, what I'm very proud of is when we can really influence a system. I love working with individual clients. It's super important. But what I'm really proud of is when we can work, for example, what we've been doing a lot last year. We've worked with the banking system in an entire country. We've done this, for example, in Armenia. We've done this in Tajikistan. We've started doing this in Turkey and in other countries as well, to get all the banks together. We've run them through a capacity building program on transition planning. What is a transition plan? What differentiates a good from a bad transition plan? How can I write one? And then I feel proud because that allows then the financial institutions to go home. They all implement this or parts of it, and it sort of really makes the system better.
Yeah, fine.
And that then extends to the real economy, because it also influences, obviously, how they lend and who they lend to. So I think those things make me quite proud, because with a small intervention, we can sort of really, it's like the bloodstream that goes through the body. We can sort of, bring blood to a whole ecosystem.
You can see it working, and you're the one that's done that. And then talking of transition plans, so obviously they are a hot topic. Yes. What's the hardest part of getting a bank in a fossil fuel dependent economy to adapt one? Are fossil fuel policies non-negotiable to EBRD? Or how do you work with banks in regions where gas is seen as a transition fuel?
Okay, there's many questions in one here.
Yeah,
Let me start.
We'll break down.
Let's break it down. On transition plans and why it's hard. I think it's hard for banks or financial institutions when they feel like the government policies are not helpful. If, for example, the government is explicitly expanding coal-fired capacity in the country, energy generation through coal, then they feel kind of obliged to finance that. So the most important thing, I think, is that the policies are also conducive. The financial institutions, they find it tricky to know what should my contribution be. Let's say if I'm lending quite strongly to the agricultural sector, they need to understand, well, how does a low-carbon pathway for that agriculture sector look like in my country? So I can then decide how to change my interventions in that sector. If they don't have that clarity for the sector or for the overall climate goals of the government, they don't know what to measure themselves against and where to put the threshold and where to put the targets.
Fine.
That on your first question. Are fossil fuel policies negotiable for us?
Yeah.
Our fossil fuel policies are very crystal clear. We've excluded coal long time ago, 2019, full exclusion. Same for oil, full exclusion. Our other fossil fuel interventions are clearly laid out in our energy sector strategy. We are generally excluding fossil fuels. There are some times when it's the only way to help a project decarbonize. I can give you a concrete example. In the city of Almaty in Kazakhstan, we've decided to finance a transformation of the heating system from coal to gas. we usually don't support gas investments, but in this case, there was absolutely no alternative. And it brings down the emissions of the city of Almaty very, very considerably. And it also improves very considerably the air pollution, which has very high health impacts.
Yeah.
So in that very specific, defined and extremely well analyzed case, we decided to finance it. But it's a rare exception.
It had to be, you had to have a very strong case for it. Okay, amazing. So to wrap up, I guess, and we'll like to put on the conclusion on the side, like, how do you respond to critics who say multilateral banks move too slowly for the climate crisis? What is your comeback for this?
I would agree that as a global community, we move too slowly for the climate crisis. And that, of course, includes the development banks, but that also includes everybody else, the governments, the consumers, everybody, the companies. So, we're not near at the scale and the speed that we need, given that the climate situation is really an emergency situation. So I do agree with that. Having said that, it's also really difficult to transform an entire economic system that's been developing over 200 years plus. Yeah. So I think our interventions are, of course, we would all love them to be much quicker and we would all love to be able to change this overnight. But it is not possible with something that has really developed over such a long time frame. So I think we do what we can. We've set ourselves very ambitious targets for our own financing. We have very high standard green and environmental and social policies. So I think given that as a global community, I think we're not being terribly fast. We do what we can.
I don't think you're doing too badly at the same time, let's be real. And then what's one piece of advice you'd give to your younger self, or maybe someone who's starting their journey, like out in banking and maybe in green financing?
I would say just trust your instinct and, stick with it. Because to be very honest, when I started a long time ago, it was neither cool nor sexy to work on environmental matters in the finance industry. It was tough. We were very unpopular, about as popular as the lawyer or the credit risk officer on a deal.
Yep.
And it was really required to be quite stubborn and quite persistent. And of course, in the last 5 years, we've seen this huge increase in interest to ESG matters and topics. It's, I think, a bit of a wave that comes and goes. So I would just say, look, it's super important. It's an extremely purposeful and gratifying work at the same time. So just roll with it against the tides.
Yeah, go with the flow in a very cool way. Okay, amazing. So I'd like to do go into a rapid fire question mode, if that's okay. So it's yes or no answers. It's only a minute long. 11 questions. So literally just yes or no, and we'll kind of go through from that, okay? So are financial markets ready for a full transition to green finance?
The internal optimist says yes.
Fine. Is current investment in green technologies enough to meet climate targets?
No.
Is the financial sector moving quickly enough to align with global climate goals?
No.
Can the private sector drive the green transition effectively?
Can, yes. Does it do it?
No. Are investors willing to accept lower returns for sustainable investments?
Sometimes.
Okay, I'll allow that one. Is the Paris Agreement driving enough market action on climate?
I mean, sorry, I cannot answer that with yes or no. The Paris Agreement, it's countries who are signatories, obviously. So I'm not sure if the market is obviously never signed up to the Paris Agreements.
Fine. And then should companies face stricter penalties for not meeting sustainability standards?
I think governments should face stricter penalties for not setting a price on carbon.
Yeah, fine. Going back to that one. Nice, love that. And then should banks be required to disclose their climate-related risks?
Yes.
Are green financial products more profitable than transitional investments?
Sometimes.
Is blended finance key to scaling green projects?
Yes, still.
Thank you.
We've just discovered that ESG does not lend itself for binary answers.
Look, Maya, thank you so much for joining today. That's been great. My brain has definitely got larger by about 4% at least from that. Thank you so much for listening today. If you found today's episode great, please subscribe to the Leaf Media Podcast on YouTube. Maybe follow us on Spotify and Apple Music Podcasts, and never miss a conversation. You can also subscribe to our Subtrack newsletter. All the resources can be found in the description box wherever you listen to us. Please leave a review to help others discover the show, drop a comment with the biggest takeaways, and share this episode with your friends and colleagues. Follow us at Leaf Media Global for updates. This has been Gren, and thank you so much. And thank you so much again, Maya.
Thank you so much, Ben, for having us.
That was great.
Thank